All right, let's get right into it. Today, we are talking about a massive power shift that's happening in finance. For years, we've had this story of the scrappy tech startups versus the big old school banks. Well, those battle lines, they're basically disappearing, creating something entirely new. This quote from the world of sports just nails what's going on in fintech right now. For so long, these companies were the underdogs, right? The disruptors. But now it feels like they've won the championship. And in doing so, they've become the new establishment. The game has totally changed. And that really gets to the core of what we're breaking down today. The old story, it's over. It is no longer fintech versus banks. The new story, the reality on the ground, is that fintech is becoming the bank. That line is blurring faster than ever. And look, this isn't just some abstract idea. It's happening as we speak. We're going to dig into 3 recent stories that show you exactly what this convergence looks like. A fintech that wants to become a bank, a huge legacy bank that's acting like a fintech, and a company that's pretty much already mastered being both. Okay, so let's kick things off with our first story. The tech company that figured out the best way to really disrupt banking was become a bank itself. So, what is Upstart really? Well, at its heart, it's this incredibly powerful AI engine that's amazing at figuring out who should get a loan using way more data than just a credit score. But here's the catch. They've always had to rely on traditional banks to actually provide the money. So Upstart has the brains, but they've always needed someone else's body, so to speak. And that reliance on other banks, it created a massive problem for them. Because Upstart isn't a national bank, they have to deal with this crazy patchwork of different state lending laws and licensing rules. I mean, can you imagine the paperwork? It's this regulatory maze that isn't just a headache, it's wildly expensive. And when I say expensive, I mean the scale is just staggering. $200 million. That's what Upstart says it's cost them just to handle all this regulatory stuff. For a tech company, that is a huge drag on innovation, and it literally limits who they're able to help. So what's the game plan? Well, they're going all in. They're planning to apply for a national bank charter from the ground up. And make no mistake, this isn't some small pivot. This is a total reinvention of their business. And it requires getting the green light from every single major federal regulator you can think of. And this isn't some distant dream either. They've got a concrete timeline laid out. They're looking to start actually building this bank in the second half of 2026, and they plan to be up and running by early 2027. So yeah, this is happening, and it's happening fast. This whole move is about finally taking control of the entire process, end to end. That incredible AI brain of theirs is finally going to get its own fully functional, nationally regulated body to go with it. So that's one side of the coin. You've got the tech companies trying to become banks, but at the same time, the big banks are making their own moves. And the funny thing is, they're starting to look a whole lot more like tech companies. Which brings us to Wells Fargo. They recently filed a trademark for something called WFUSD. And it makes you wonder, right? Why on earth would one of the biggest, most traditional banks in America want to create its own crypto stablecoin? Well, the answer really comes down to just one thing: speed. The old payment systems, what people call ACH rails, are notoriously slow. A payment can take hours, sometimes even days. But payments on a blockchain using a stablecoin, they settle almost instantly, 24/7. For the world of finance, that is an absolute game changer. And the irony here is just, it's perfect. For years, you had Wall Street kind of looking down its nose at crypto, calling it a fringe experiment. And now they're the ones adopting its core technology. They don't see stablecoins as a threat anymore. They see them as a critical upgrade to their own old, creaky systems. Okay, so we've seen a fintech becoming a bank, and a bank acting like a fintech. But what if a company did both? Well, that's our final story. That is the SoFi blueprint. To really wrap your head around just how big SoFi has become, think about this. They aren't just a tech company with a banking license. No, they are now officially one of the top 50 largest banks in the entire United States by assets. They're playing in the big leagues now. And what a journey it's been. They started out more than a decade ago with a pretty narrow focus, just refinancing student loans. But today, thanks to that huge strategic move to get a bank charter a few years back, they've turned into an absolute financial powerhouse. So what did getting that charter actually unlock for them? Pretty much everything. It let SoFi build out this complete financial ecosystem. See, now they can take deposits directly from customers into their own savings accounts and then use that money to fund their own loans. That's a way more profitable and much more stable way to run the business. But here's where it all clicks into place. SoFi isn't just a bank. They're also looking into their own stablecoin, SoFi USD. This puts them smack in the middle of everything we've been talking about. They are a regulated, nationally chartered bank that's also using cutting-edge blockchain payment technology. Okay, so let's zoom out, let's put all these pieces together and talk about what this great financial convergence really means for all of us. When you look at these three stories, the pattern is just crystal clear. You've got Upstart, the brain, finally getting its banking body. You've got Wells Fargo, the old guard, building brand new, faster rails. And then you have SoFi, the rebel, who used both of those strategies to build a new kind of empire. So the big takeaway here is simple. The fight is over. The disruptors and the incumbents, they're not really competitors in the old sense anymore. They're literally morphing into one another, meeting right in the middle to create this new hybrid financial system. And that leaves us with one last, pretty fascinating question to think about. When today's rebels become tomorrow's establishment, who's out there in a garage somewhere right now building the thing that's going to disrupt them? That's the next story we all need to be watching. Thanks for digging into this with us.